Neobanks. Introduction. Hello students, welcome to the class on the introduction of neobanks. The financial sector is going through a lot of product innovation. An important innovation in the field of financial technology companies, fintech, is the introduction of neobanks. They operate online without physical branch networks. Since they are completely online, there is no expenditure on infrastructure, rent, electricity, etc. This enables them to offer services at a significantly lower price than the traditional brick and mortar banks. Let us now turn to some of the highlights of neobanks. 1. They offer money management services digitally via mobile apps. They are convenient as all one needs is a smartphone with an internet connectivity to access their account and make transaction from anywhere. 2. Neobanks are different from digital banks, but similar to them in terms of an online operation. Digital banks are extensions of established physical banks, but neobanks have no physical presence outside their partnership with traditional banks. 3. Neobanks offer comparatively limited set of services. Their AI driven services come at significantly lesser cost. 4. RBI has not yet fully recognized digital banking establishments. Hence, neobanks can provide a set of banking functions through their partnerships with licensed banks. For example, one can open a savings account with neobanks and avail of all the usual banking services and get physical credit or debit card. 5. Neobanks also provide personal and business loans driven by quick processing of applications. 6. However, neobanks cannot offer some of the banking services though they perform all money management services. This is because they operate without a banking license. 7. The absence of physical branches has resulted in a substantial reduction of overhead charges. Hence, they are able to reduce the prices of their services and offer higher interest on deposits. It usually ranges between 3.5% and 7% per year, depending on the sum and the tenure of investment. Some banks also offer a zero balance account. However, there is a need to tread cautiously while opening an account with neobanks, as it is not without risks. Some of the pitfalls are: 1. Since there are no physical branches, there is no direct contact with customers. Hence, users may be hesitant in engaging with neobanks. This may also lead to a lack of trust and reliability. 2. As for RBI regulation guidelines, neobanks cannot function independently and have to partner with traditional banks. The grey area in the loosely defined protocols spells high risk for the customer and the institutions. Development of neobanks is still in a nascent stage. Hence, it is advisable not to open a primary account with them. Rather, a secondary account can be opened with them, since all neobanks have partnered with scheduled commercial banks which are governed by RBI. Thus, customers can avail of their ease of banking facilities and take advantage of some of the offers that they may provide on special financial products such as lower interest rates on credit cards. Broadly, there are three types of neobanks: savings led, credit led and payments led. In terms of savings led, there is a segment of customers, the millennials and Generation Z, who look for online only digital bank accounts. Neobanks also provide proper access of credit where one can borrow money reliably and build credit profile. Getting flexible access to money through the convenience of smartphone is one of the differentiators on the credit side. Let us now move on to different types of neobanks. 1. Front end neobank. A front end focused neobank does not have an operating banking license. It usually relies on the backing of a traditional financial institution and functions in partnership with them to provide services to its customers. 2. Digital banking units. Stand-alone or independent digital banks are the digital arms of an established bank. SBI's YONO is a popular example. It is necessary to obtain a virtual banking license to run a standalone digital bank. These banks can acquire their banking license once they have sufficient capital to ensure their investors' deposits. 3. Full stack digital banks licensed. Full stack digital banks have the required bank regulatory approvals and provide a broad selection of services. They issue deposits and loans and maintain their independent brand and balance sheets. In an increasingly digital environment, these banks are not burdened by the costly networks of physical branches. It is important to note here that the full stack digital banks are not yet legalized in India. However, changes have been proposed by authorities to level the playing field. Some of the examples of neobanks are Razorpay, InstaPay, Kotak 811, Okar Neo, etc. Conclusion. Students, we can now conclude that neobanks have emerged to provide seamless customer experience with respect to banking transactions. However, neobanks depend on partnership with other banks, and when the partnership does not work out, there could be a problem to the customers. Having no license framework for the neobanking space is one of the challenges for the industry. Nevertheless, partnership will be the way forward in future, even after the industry is brought into license framework and can act individually. Thank you.